Thank God it's Friday, and we've got Todd Sullivan from Value Plays on here with the latest information. Now, Todd, I saw that you're getting into oil now.
Yeah. You know, it's I've been waiting for it to drop.
You are so patient.
And you know what? No matter what they do, it's like that guy Jason from those horror movies. They can't kill oil.
It just keeps coming back, right?
Yeah, you know, it's 40 and 50. No matter what they mean. If I would have told you a year ago that we would have successive 6% drop in GDP in the U.S. in a global recession, oil will be at 50, you probably would have laughed at me.
Right? It doesn't add up, right, bud?
No, it doesn't. So it tells me that people realize, I think, supply of oil is falling off the face of the earth. And when any demand comes back into the market or any geopolitical event comes into the market, it's going to go. It's going to run. So I did it. I did it through some January 11 calls because I didn't want to tie up too much cash in case we do get a sell-off in the market. I wanted to have some extra laying around to pick some other stuff up. So
nice. Now, guys, Todd explains this in great detail on his blog at valueplays.blogspot.com, which we'll link through to. But, Todd, do you mind running us through it real quick?
No, what I did was I took the January 11 $35 USO calls for $5.50 each. I think they're trading at $5.90 now. So that basically implies a price level for oil of roughly $58, or about 16% higher what it is now.
So if USO is at 35 in January of 11, that'll mean oil is about 58.
Give or take. And it could be, now USO doesn't exactly track it, but I just kind of put it down in the basic level so people have an idea of where oil needs to be sort of for this to be trading at 35.
So in 2 years, you're looking for oil to go up to $58, and anything above that's going to be just wonderful golden gravy.
Yeah, I see legitimate scenarios. Oil's at $70, $80, or $100 a barrel in 2011.
Absolutely. I saw Boone Pickens say $75 this year. I saw some big guy that was in charge of something in the Middle East say the same thing, and I kind of feel like they're on target. Now, you say that's a lot better way to go than DXO because DXO erodes.
Well, yeah, it's DXO is a double ETF, so it goes twice the shaken oil. So, two times the downside is greater than two times the upside, right? So there's a scenario where oil kind of drifts for a while, and DXO erodes faster than the price of oil. DXO is great as if you're having a Middle East meeting, you think it's going to go bad, you get in DXO. If oil pops 5% in a week, you got a 10% gain.
Right.
The best thing for those short-term price movements when you anticipate them. But for a longer-term holding where patience is required, you think you're either better off going straight USO or going into some options on it, because the triple and double ETFs, if you hold them for long enough and you don't get market volatility in the way you want,
they just erode, right? Like fast. I traded DXO twice this week and picked up some nice change, but as you say, it's over a day, not very much longer. I think one was 2 days.
Yeah, I saw that. You did really well. Even 2 days, even a week. DXO tracks the monthly change in oil, so it's not like the FAS that track a daily change. They track the monthly, so it gives you a little more swing trade action. You can go a week or two with it and not have too many worries like you do with the other ones. No. They don't reset every day. And
by buying USO, you're tying up quite a bit of money right now.
Right. So, say you bought two call options for $1,100, that essentially gives you $6,000 worth of USO for the $1,100, and gives you the price movement and the leverage involved with that, with the option and stuff like that. So, for me, in this particular situation, it was better because I do anticipate a market sell-off before 2011, and I didn't want to tie up that much money in the USO.
Right.
I wanted to have extra laying around, so if other things I have drop, I can pick more up or look at more opportunities. Because I'm not sitting on a Buffett style of cash with $40 billion in the bank looking for a home.
No, what do you have? Like 30, right?
Yeah, I wish.
So there's a big difference. It's that last $10 billion gives you the freedom.
The first $10 billion is the hardest. Isn't that what Boone said?
Well, I'm open to follow in your footsteps and suffer that pain one of these days, my friend. I also see that you post an article that's doing less bad, getting better.
Yeah, it's funny. Every time I hear the economy, people are starting to use the words improving. And, just because GDP is worsening at a slower rate doesn't equate to getting better to me. It just means things aren't deteriorating as fast, and that's not better. That's maybe less worse. I mean, I think it's a lot of it's an outlook and how you way you look at it. GDP fell 6.4 in Q4 and 6.1 in Q1. That means it's 6% worse than it was in Q4, which was really bad.
Right. This is not good.
And this quarter, that means it's 2% worse than it was the prior quarter. GDP is not like earnings where they track period to period, year over year. It's a rolling, constant thing. And, 6% is horrible no matter how you slice it, no matter how you look at it. It's bad. It's real bad. And I just don't get the improving scenario that's out there. And, I think maybe we're looking at a recalibration of what the new normal is in the economy. And
it feels to me like we're heading back into we're going to compare with the 70s.
Yeah,
we didn't end up in the Depression. People aren't selling apples on the corner. Of course, people these days are too lazy to do that. But it doesn't feel good to me. And I think all these laid off people and closing businesses are going to spiral worse, not better.
Yeah, I mean, I think if you think housing is going to continue to get worse, and I don't see any scenario how it doesn't. Unemployment is going to get worse. I don't see how that equates to things getting better in the overall economy. I don't know. I think I said in the blog post, we could have a general malaise for the next year where things come down to this level, and GDP kind of flattens out, and even at zero at this level, is that better for the rest of this year? No,
it's really not. It's not actually getting better, right?
Oh,
it's the shark's eating your leg, but he's doing it slower.
Yeah, I use a scenario like if I had 3 heart attacks today and then only 2 tomorrow, would the doctor tell me tomorrow I'm getting better?
Right.
No, he would.
But give you a pat on the ass and send you home, right?
Exactly. There's still a problem. You're still really sick. It's just, I don't know. I think...
It feels Orwellian, right?
And that goes in part to the market. I think the market is reacting as though things are getting better. And things are going to be fine in 6 months. And I think whether or not, I think you could have a real mother of a sell-off. So that's the way I've thought for the last month, and I continue to think that way until I'm presented with some kind of evidence that things are getting significantly better. Not just, consumer spending jumped a month. Well, if it falls off a cliff the month before,
right,
people do have to go buy toilet paper and,
right, right,
to replace. There is some replacement value there. So let me see a trend, and not just a 1 month aberration, and I'll start getting excited.
Yeah, I had a bunch of Chinese small caps this week that took huge pops, right? And I love them all, and I think China's going to do very well. But I think that we're going to see a pullback when someday there's going to be a little bit of reality here. And when we see that big pullback, China will feel it just as much, I think. And I sold off them at gains, and I'm figuring that there's some kind of a pullback coming, and I'll buy back in.
I mean, sooner or later, I don't know. If to have the 2 best months in the history of the market, and to have GDP drop 6% in the same quarter, it doesn't add up to me. It doesn't match up. It means the market's going on hope, and the economy's operating on reality. And those are divergent paths, and I think eventually they have to meet up, or
right,
some sort of reality's got to enter into the equation there. 40% of the rise in the market was financials. Well, we bailed them all out, or they would have failed, and then we changed the accounting rules to make their earnings better. So how is that the economy improving?
I know, bro. I just don't see it either.
How does that mean the economy is getting better? It doesn't. If you change the rules a little bit to make it look better. Well,
yeah, it's like, don't ignore the man behind the curtain.
Exactly. Nothing to see here, folks. Move along, right?
That's what I feel like too, my friend. Thank you so much for taking time out of your afternoon. Guys, Todd is one of the nicest and the smartest people that I know, and I want you to read his blog daily. You're going to learn an awful lot, just like I have. He's at valueplays.blogspot.com, and I'll link to it from our site. Come back to our site at wsmco.com, and I link through to him every day. And I read him every day. He's a brilliant guy. You should learn from him. Todd, thanks for joining us. Have a great weekend, my friend.
Hey, you have yourself a great one, too.